Morning and welcome to the first Gold Goats and Guns market report for January of 2019. I hope you guys all had a great holiday. We did. We had a bunch of people over for the first time in a long time to just hang out for the day, and I get to show off my house. I get to, I have to show some new friends what I actually do on a what my life actually looks like outside of showing up for game night, as it were. So we had a great time, and it was a really good day. So I hope you guys all enjoyed your New Year's as well. There was stunningly no alcohol involved. All right, let's get right to it. Speaking of alcohol, because this guy being in the U.S. Senate, I've worried about it from the day he announced that he was going to run, knowing full well that he would win. If we watch what's happening since Trump has announced the pullout of troops from Syria, you can see the abject panic on the part of the neocon political establishment from Israel, trying to create a false flag by using civilian airliners as shields, which the Syrian air defense crews did not fall for. And Lindsey Graham losing his mind and now visiting with the president the other day, and now altering the timetable for withdrawal to 120 days. And I think that the reason, there's a couple of things I think is going on here, and I want you to put this in your back pocket. I don't for a second believe that they're going to let Trump pull out of Syria. He may still be able to do it. They're going to push for they're going to push to remove him from office. And I'll bet you that Graham laid down the law with him yesterday, saying, look, you don't have a secure majority in the Senate. If they impeach you in the House, we'll back them. So back off and do what you're told. Romney has he's not 24 hours in office and publishes an article that, of course, he wrote before he was even sworn in about Trump. Also a shot across the bow saying, we're going to take you down. So, going at, and it's going to be either a 25th Amendment removal, or it's going to be impeachment over something he didn't even do while he was in office. I suspect. I don't know. There comes a point where they've got Trump probably dead to rights on war crimes in Yemen and Syria. They've probably got him on a number of things that they've made him do, or he went along with, which they can then reframe as war crimes, and then make the argument that he needs to be removed as commander-in-chief because he's not qualified. This is going to be Q1 in the United States. And the Republican establishment has already made it abundantly clear this is where we're going. And I think that this is their big gambit. So when I look at this picture and Trump tweets out that, I won and Romney lost, at this point I have to ask myself, who's saying that in this picture? Because this is real. This is now where the rubber meets the road. And this is where Trump is going to define his presidency or not. Because if he announces this pullout and then doesn't go through with it, and winds up, even worse, having to, being forced to double down or whatever, he will lose what's left of his base, which is exactly what they want. So what has to happen here is the ultimate power play between the GOP establishment and Donald Trump. And Donald Trump has to go full-on populist. And he needs to stop playing coy with the American people. He needs to go directly to them at all points, at all times, explain to them exactly what's going on, and say, Lindsey Graham is a traitor to our country. I have announced a pullout of Syria that needs to be dealt with, and he and the rest of them have threatened me with impeachment, and the rest of it. He needs to do this. He needs to go completely and utterly on the offensive, or he will be destroyed. He has to fight them with tactics. He has to just fight them with the truth. And it doesn't matter how it looks, because everybody will stand back and go, yeah, we all know, Don. So give us the goods and force these guys to backpedal. Force these guys on the defensive. Make it personal for them. Call them the traitors. This is going to be a rough fight. He has to do this. Because if he doesn't, his presidency's over. Either figuratively or metaphorically, or literally. So, yeah. And there was one other thing about this I wanted to mention, and I can't think of it off the top of my head. During that rant, I just lost it. So we'll go with that for now. More ideas will come. I'll do another video probably for YouTube on this issue as well, because this is a big deal. And I'm going to be on Halsey's show tomorrow night at 10 o'clock for those of you who are night owls. So I just set that up with him today. All right. And I'm doing a podcast with one of our subscribers for on foreign policy, which I just got invited to, which is also really awesome. And I'll make sure that there are links to that, and you guys can get to that as well. So gracious invite by one of our subscribers last night. So it was really good. All right. Let's talk about the ECB this morning before I go to the charts. The report I saw this morning from Zero Hedge is that the ECB bypassed pretty much all internal Italian institutions to take control administratively of a Banco Sergio. I think that's how it's pronounced. That was one insolvent, which is actually redundant because all the banks in Europe are insolvent. But could not secure funding after the board refused. The majority shareholders refused an equity raise. So reading it this morning, I'm a little floundering on it here. But what's important is that the ECB saw this as an opportunity to come in and deal with the problem directly in much the same way that they dealt with Banco Popular 2 years ago when they sold it to Santander for $1. The EU's banking rules allow them to literally come in if they feel it's important. If they feel it's important enough, and they're the only ones that make that decision. There's no consulting with the member state, with their government, that they can take control. So the board of the bank resigned, and the ECB took over and is now administrating the bank to try and keep it open and to avoid a bank run. This is an act of pure desperation on the part of the ECB. The euro is down this morning after rallying to start the year or to end the year. Gold in euros. I'm going to show you the chart. It's really impressive what's happening in the price of gold versus the euro. Really impressive. And I'm going to show you that chart in a minute. And I was happy to be on top of that breakout when it occurred, because now we're looking at not just a breakout, but a massive reversal of the pattern at every time frame. And I was looking at the data this morning. Is what I was actually been working on charts for about an hour and a half before I started this morning, because I had to build some of these charts for you today. So because I didn't have this data directly, I was just kind of looking at it, but I just kind of looking at monthly and quarterly charts. But I decided to build some yearly charts to show you what's happening here, to give a better picture of what's going on. So it's really impressive what's happening. I really do think that gold and euros is our harbinger of the big moves that we're going to see later this year. That Europeans are that there's a real rush into gold at the retail level, and maybe not here in the United States just yet, but certainly in Europe, relatively speaking, because gold and the euro trade reversing as hard as it has, in lockstep with one another, is a complete reversal of the 2017, most of 2018 dynamic. All right. And we've seen it just in the last couple of months. All right. Let's talk about gold. So I put up the monthly and quarterly charts on Sunday, so you guys can review them if you want. I wanted to show you the yearly chart now that we've got a yearly close. Actually, again, this is another one of those charts I had to build this morning. But you can see, I just want to highlight that, we talk about when we drill into all this data, and there's all this stuff to talk about on a week-to-week basis. When you pull back out and you look at it at the yearly level, gold's been consolidating now for 5 years, below $1,500. That's pretty much what's below $1,400, and with $1,150 on the downside and $1,400 or $1,375 on the upside, and we've just been trading in this band very comfortably now for a few years. This is the kind of boring action that presages breakouts. Markets don't like boring, unless gold were to be the reserve asset and trade asset of the world, right? If gold was the thing liquefying global trade, then there would be no charts of gold, because it would just be gold. Everything would be denominated in gold. We wouldn't care, right? Everything would be in gold, and that would be that. And as opposed to everything being referenced back to the dollar. So watching gold achieve some kind of relative stability here was eerily reminiscent of the late 1990s, when nothing seemed to raise the gold price, no matter what happened. And that's the kind of recipe for a breakout to the upside, because when there are no bulls, and there honestly are no bears, when there's just nobody interested, and volume starts to slack off, which is not what we're seeing in the futures market. I mean, we're at record levels of leverage on the short end. So once the impetus starts to go higher, once volatility has been tamped down to the point where it's uninteresting, and this is wholly a manufactured scenario by the central banks. Don't get me wrong. I do believe that markets are bigger than central banks, but only when people are, only when people overwhelm the central banks. When people aren't interested, then the central banks have a much easier time of massaging and quote unquote manipulating the markets. And you have to think of it in those terms. And that's where we are in gold. We're at that level of real, oh my God. Yeah, it's just gold. It's not doing anything. And I mean, everybody's talking about it this way. I've got verbiage to this in my in the newsletter coming up for January. I was reading David Collins' end of the year review, and he was just like, "Yeah, gold is just freaking completely boring. It's not even interesting anymore. No one's talking about gold." I'm like, "Yeah, exactly. I don't write articles for Seeking Alpha anymore, making $200 to $300 a piece, because no one's interested in gold, unless you're one of the top writers over there. You're not going to make any money, because people aren't searching out articles on gold. They're just preaching to the same audience that they've maintained as this bear market has ground investor interest into paste, which is exactly where you want to be on the verge of the next bull market. It always is this way. So that being said, that's gold in dollars. Now let's talk about gold in euros. Now, one of the things that you guys know that I read Martin Armstrong, and you know that we talk about cycles and how you create bottoms and you create tops is by getting people on the wrong side of the trade, right? I was talking to one of our subscribers on our Slack channel yesterday, and he very succinctly put it that you always fade the dominant, sentiment, as a trader. So if everybody's bullish, you want to be bearish, and if everybody's bearish, you want to be bullish. We were talking about that in terms of oil prices, and I really think that we're probably close to max pain in the oil markets, and certainly at the stock markets, though I think there may be some more retest to happen in both those areas as we get maybe a little bit of a dead cat bounce this week, but then later in the month we may get some choppiness and some retests of the recent lows. That's what I think is going to happen. That's the most likely outcome for the next couple of weeks in markets like that. But looking at what's happening here in gold, in euro terms, look at this. Look at the stability here. This was the big move up. This is a quarterly chart in 2016 post-Brexit. We had a huge move up in gold and euro terms, and then Brexit finished, and then the market has been slowly but steadily pushing back towards this low, and then never closing below it. How many times? Look, 1, 2, 3, 4 times over the course of 2017 and 2018 did that try to break down. Now, note, no reversal bar here. We had the opportunity for reversal were in these two bars here, didn't come close to that. And then a bunch of volatility, and then no volatility while this support level held. And then we got the big washout last year. Remember, last year that was the biggest in dollar terms, the longest structural downtrend of the entire 7-year bull market in dollars. And a move that big was going to create a move down in gold across the board, and it did, and it creates this moment here. And look, we have a false move because this breaks down, gold and euros breaks down below this level, right? This support level, and then boom, immediately reverses. This is what bottoms look like, right? You have this breakdown of support. We got a false move down. Everybody's on the wrong side of the freaking trade, and everybody goes, "Oh, Jesus, Europe's a mess," and they all start howling at the gold. And that's where we are. That's what happened in the last 3 weeks of 2018, and that's where we are. And we're following through with that this morning. And today's the price action of gold and the euro today is so far today has been unbelievable. The euro's off like a full penny. The euro's down like a penny, and gold is up $6. And it was trading yesterday about 1283, 1284. It's now trading at 1287, pushing towards 1290, and it's pushed to a high of 1291 so far this week. So gold is being pulled up towards 1306, the recent highs around 1306, 1308 in dollar terms. But in euro terms, this thing's a house on fire. And this is telling you that there's something seriously wrong in Europe. And when you go, and again, I've been making this point over and over again, when you look at the yield curve inversions that are happening, when the crushing of the yield curves in European bonds between 3 months and 2 years, all the way across Europe, where this is all this weird stuff happening, and no one knows what the price of money should be between, from 3 months to 2 years out, depending on the country, especially in the Swiss franc. It's a mess. There's a real problem. And then we have this morning's news that, there was a bank in Italy that needed to be taken over administratively by the ECB so that they can, forcibly merge it with Unicredit for $1 or something. And that's what's going on here. Okay? So, big stuff happening. All right, so now let's get to so this was the chart I had to actually rebuild because I didn't have much of this data. The last time I built a USDX chart, I think it was on a weekly basis. So I had to go grab monthly data, turn it into quarterly data, turn it into yearly data, and format the spreadsheet and everything else. I just wanted to throw you, this is, for all of you dollar bears out there. And believe me, in the long run, I'm a dollar bear, right? Obviously, I'm a gold bull, I'm a dollar bear. But in the short term, given this does not surprise me. Now let's look at the yearly chart of the U.S. dollar index, which obviously is not a full picture of the dollar, because obviously there's no Chinese yuan in here, right? This is just the USDX is still an anachronism, but it's a great anachronism to describe the U.S. against the basket of currencies that isn't the Chinese yuan, for all intents and purposes. So your opportunity here after a big 3-year uptrend move in the dollar was and then we had this massive move down in 2017 that just barely avoided a reversal by literally by 0.2 points. The low here was like 91.92, and this is like 92.19 or something like that. It's really, 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 really small, but we avoided it. And then we got a breakdown in 2018, and we avoided it again. And now we're moving higher with a very high percentage, with a very high probability setup that will break this high, confirming this is the low, and that's that. And if the quarterly chart looks even better than this, but it just, sometimes the market, when the market tells you stuff when you're willing to look at it, right? And I think this yearly chart of the U.S. dollar index gives you an idea that the bull market in the dollar is not over. There's still a move towards 110 or 120 in our future. I don't know that it's this year or next year or 2021 or whatever, but it's going to happen. Excuse me. Because obviously the sovereign debt crisis in Europe is not going to take 3 weeks to resolve itself. It's going to take 3 years. So, and the window for that beginning, we're already in that window now, and now it's unfolding slowly but surely with Juncker and the rest of them kicking and screaming and trying to avoid that fate, but that's where we are. So, this was a breakout. This breakout has not been been reversed technically, and that's where we are. All right, and so, yeah, there'll be some tactical moves here and there. There'll be some ups and downs or whatever, but I'll be shocked if this is not the, effectively the wave low or cycle low, whatever you want to call it. It doesn't really, I don't really care. I don't believe in that stuff. Well, I do to a point, but not in any kind of structural way. I believe that, I believe in the numbers and what the markets tell us. And this is a big tell that the U.S. dollar index bull market is not done, and that the capital wave, the wave of capital that's coming our way has not yet been expended. And that's also bullish for U.S. stocks, because we'll see the dollar, gold, and stocks all rise in concert at some point in the future. It won't be for very long. That trade will not will not last more than 3 to 6 months. If it does, then wow. 3 to 6 months probably is a good bet, and there'll be a really great trade in there. I think we're kind of set up well for it. So that's where we are coming into the beginning of 2019. If anybody has any questions or you comments or obviously things that you want to talk about, I note this morning that Tesla was able to massage their stock price to the end of 2018, which is what they needed to do, above $300, and now they can release their new production numbers, and they're all terrible, and now the stock is going to collapse for a little while. And then once we're past February, though, if you are still holding Tesla past February, you're an idiot. I'm just saying, you're an idiot, because once the convertible bond issue with them passes, that stock's going to drop like a rock. It just is. It's the only way the company's going to survive, is because they can't pay that convertible bond. So they've got to keep the stock price, and it gets triggered to convertibility if the stock price is below. So it's converted into stock if the bond issue is converted to stock if the price is above a certain point. I think it's $300. And if it's below that, then they got to pay the whole freaking thing off, and they don't have the money for it. So, all right. That's what I got for you right now, and I really think that that's what they're gunning for in the Tesla thing. So that's what I got for you today. If you've got any questions or comments or things you want me to cover, you just pop them in the comments below. I'll be happy to do so. You guys are great. I really appreciate you sticking with me, and we'll talk soon. Keep your stick on the ice.